go with the 16-1 work together, which is on page 481 in your book. There are 5 steps here. It has a list of accounts taken from Superior Corporation's adjusted trial balance for each account that's on the income statement. Tell us if it's which section of the income statement or that it's not. If they don't appear, select not on the income statement. So cash, petty cash, assets are not on the income statement. So these are all assets down through, a long way, or contra assets, all the way down through accumulated depreciation or assets. Those are not on an income statement. Then accounts payable, all the liabilities, so any payable, not on the income statement. Not. Capital stock, not on the income statement. Retained earnings, not on the income statement. Dividends, not on the income statement. Income summary, not on the income statement. So then, let's get these column headings again. It's operating revenue, COGS, OPEX, and unrelated. So keep that in mind as I start going. So sales, sales discounts, sales returns and allowances are all part of operating revenue. Cost of merchandise sold includes purchases, purchase discounts, purchase returns, and allowances. Operating expenses include all of these expenses down through, I'll find out when I get there, payroll taxes, rent, supplies, salary, collectible accounts, utility. So all the way down through utilities is operating expenses, and then federal income tax and interest income are unrelated to normal operations. Other. So then we go to the next step, and it says the calculations required to determine gross profit are as follows. Determine the order in which these calculations are made. So first we would figure out net sales. Then cost of merchandise sold. Then net purchases. And then gross profit. That is the order it would show up on the income statement. And then it wants you to use the list below to indicate the formulas for each calculation. So for cost of merchandise sold, you start with beginning inventory. You add net purchases to get cost of merchandise available for sale. Then you subtract ending inventory to get cost of merchandise sold. Gross profit is net sales minus cost of merchandise sold. Net purchases is purchases minus purchase discount and minus purchase returns and allowances. And net sales is sales minus sales discount and minus sales returns and allowances. Then we need to determine the gross profit, and it gives us an adjusted trial balance here. And it wants us to prepare the income statement, including the heading up to and including gross profit. Enter the current year is 20 -- don't abbreviate the month, and it gives us the beginning merchandise inventory. So the name of our company is Superior Corporation. It is an income statement. It is for year ended December 31, 20 dash. And we are going to start with operating revenue. Apparently it doesn't want a colon. And we are going to say sales less sales discounts and sales return equals net sales. And again, I'm going to get all these amounts from up here in our income statement. So sales is 505,897, sales discounts, sales returns. So I'm going to lay out the format of this thing first, and then I'll go put the numbers in so you can see that. So then we're going to do cost of merchandise sold. And it's merchandise inventory, January 1, 20, whatever. Purchases less purchase discounts and returns equals net purchases. And then we got total cost of merchandise. Apparently it should be abbreviated. Available for sale. Less merchandise inventory December 31, 20, whatever, equals cost of merchandise sold and gross profit. So again, I got all these numbers from up above. I took sales from up there. I took these two. We add these two together to get the reduction or the decrease related to net sales. Take sales minus that deduction to get net sales. Then the cost of merchandise sold section. I got this from up in the directions. I got the purchases and the two contra purchase accounts from up above. The 1933 comes from these two added together. I take 203 minus 1 and I get net purchases of 201. And I add net purchases to the beginning of inventory to get 288. And then 288 less merchandise inventory from up above. And I get 207,719.18. And then I take net sales minus cost of merchandise sold and get 293,706. And again, if you need to pause for that, fine. And I think honestly on the last step, when I had to put things in order, I put net sales and then I put cost of merchandise sold second, but I really think it probably ought to be third because net purchases gets calculated and then cost of merchandise sold. I was thinking of the heading, but I shouldn't have. It should have been net sales, then net purchases, and then cost of merchandise sold, and then gross profit. FYI. Next, it wants us to finish the income statement, so I'm going to go ahead and just have the show answer. So we had done through gross profit. Now it's operating expenses, and I list all of them from up above all the way down through utilities expense. I get total operating expenses by adding all those of 201, 144.12. Then I take gross profit of 293,706, subtract operating expenses to get income from operations of $92,562.29. Then I have other revenue of interest $466.20 from up above. That's an add, so I add these two to get net income before federal tax less the tax from up above equals net income after federal income tax. So go ahead and pause if you need to on that. And then last but not least, it wants us to do the vertical analysis and round everything to 0.1%. So everything is as a percent of net sales, so our denominator is always going to be 501, 425.59. So I take 501, 425, divide by 501, 425, I get 100%. Take 207,719, divided by 501, I get 41.4. This divided by the net sales number, 58.6. This divided by net sales, this divided by net sales is 18.5. This divided by net sales. So do all of them divided by net sales, and I would get this. And then I should be able to check myself by taking 100% minus 41.4 equals 58.6, and then 58.6 minus 40.1 is 18.5. 18.5 plus 0.1 is 18.6. 18.6 minus 4 is 14.6. So then I know that I rounded well and everything worked out fine. So that is the entire work together doing an income statement for a business. And again, the hardest part, I think, is making sure that I get this section kind of all squared away, the operating revenue and the cost of merchandise sold down through gross profit. The rest is just kind of filling out a form.